for the good in everything. Look for the people who will set your soul free. It always seems impossible until it's done. Look for the good in everything.
We are already into the second month of 2021, and that means 2020 is behind us, and thank goodness. And I would say that some things are certainly feeling different already. But unfortunately, some things kind of feel the same as last year. Now, I want to invite you to stare into my investment crystal ball and let's talk through all of the different things that are happening in the world, which are simultaneously creating clarity, but also creating some cloudiness as we try to figure out what's next for our investments. Well, we're going to start with what's new in 2021. Well, we have a new president, and Joe Biden is going to be leading our country for the next 4 years. And the question is, what might that mean for our investments moving forward? I believe that we most likely will see tax increases, though I am of the opinion that they're not going to be as significant as some are concerned about. There's also talk about significant changes to social programs and higher debt spending, or all other policies that might be coming out of the White House. Now, I'm of the mindset that really only a couple of these new policies and laws that are being talked about will probably get through the Senate. You see, the Democratic Party has control of the House and also the Senate. Though the Senate is 50-50, there's a tiebreaker that goes to the Vice President, who will undoubtedly side with the Democratic Party. And because of that, there are a lot of folks around me and in the media that are saying that there's going to be a significant amount of new laws passed. And the stock market does not like uncertainty, and new laws creates uncertainty. However, there's something called the filibuster. Now, the filibuster has been around since the 1850s. And what it gives is gives the minority party in Washington, D.C., and in this case, that's the Republican Party, it gives them the ability to slow down the progress of any significant bill that they're against. Now, to counter that tactic, the Democratic Party can use what's called the nuclear option, and they're going to push certain bills through with different procedures. And, it's all really quite confusing. And to me, it just shows that we still have our checks and balances in place. And so it's my belief that really only a handful of these laws will actually get passed through the Senate. And that creates stability, which our market likes. And that's good for our investments. And as a reminder, historically, if you invest only when a Republican controls the White House, or if you invest only when a Democrat is in control of the White House, you would significantly have less money than if you stayed engaged throughout. So my crystal ball is pretty clear on this one. We need to stay engaged in our investments regardless of what's going on in Washington, D.C. I believe what's more important to our investments is what's happening with the coronavirus. Increases in taxes may have a minor effect on the stock market, but when you compare it to the overall effect of the coronavirus on jobs and the economy, really, there's no contest. The United States economy is based on the health and spending habits of the consumer. So when people don't have jobs, well, they don't spend money. So let's take a look at the latest news on COVID. The number of people testing positive in the United States remains quite high still. And it's much higher than this last summer and certainly last winter. But if you look at the chart, we're coming well off of a peak. And to me, it looks quite promising on where we're headed. As of February 2nd, the total number of confirmed positive cases in the United States since the very beginning is a little over 27 million. That's a significant amount of people, obviously, and a hugely negative effect on the economy. But there is some positive news coming out about the vaccine. And just in the first couple months, we've been able to vaccinate 33.7 million people. Now that's right. We actually have been able to vaccinate more people in the first couple months than have ever tested positive. And on a daily basis, there's about 100,000 people testing positive in the United States. But we're giving a 1.3 million shots every day. So when you combine the fact that we've already vaccinated more people than have ever tested positive, and we are vaccinating 10 times the people that are testing positive, I, for one, am extremely hopeful that we're well on our way to taking away the fear of COVID. And that would obviously have a really positive effect on the economy as people are allowed to go back to work and we have confidence to travel and we get back to some semblance of normalcy. Now, as I have discussed before, the stock market is a leading indicator, meaning that it goes up and down before the actual events happen. So if you compare the number of positive daily cases in the United States to how the actual stock market did at that exact time, you'll see an interesting correlation. On the far left of these charts, when the United States only had a handful of cases, the stock market lost 1/3 of its value because there was uncertainty of this unknown virus and what was going to happen. But as we move to the right, when the United States actually started seeing a significant amount of daily cases, the stock market started to turn positive. And all the way to the far right, when the United States had its highest amount of daily cases, the stock market just kept going up and up and up because the market is looking at what's next. It's looking beyond all of the lockdowns into the future, and it has a lot of hope that we're going to be just fine. So with all of this news of COVID and the vaccine, my crystal ball starts to clear up a little bit on the positive side. Well, if our economy is going to strengthen significantly as we get out of this COVID lockdown, then you would expect our investments would do extremely well. Well, unfortunately, it's not that easy. The reason is because we had a significant positive rate of return in 2020, even though we were going through the lockdowns, and even though companies really weren't making all that much money in profits. You see, I focus our investment analysis on how much a company actually earns, and I compare that to the stock price that we would be paying for that stock. Now, that metric is called a PE ratio. Now, I believe the price of the stock should correspond to how much a company is profiting after all the expenses are paid. Now, just imagine you're going shopping for a t-shirt, and you think and are willing to pay $15 for that t-shirt. Now, if you go into the store and you see the t-shirt on the rack with a sign hanging for sale at $10, you're thinking to yourself, that's a great value. I think it's worth $15. $10 is a great value, and you can have confidence in buying that you're getting a good buy. But if that same exact t-shirt, instead of $10, is being sold for $82, you'd be thinking, I don't think so. There's not enough value there. I don't want to buy a t-shirt for $82. In the same way you're looking at that t-shirt, I look at stocks. I want the PE ratio to be around 15 to 20. The higher the number, the more concerned I am that that stock would go down, whereas the lower the number, the better value, and I can feel confident that we should be buying that stock. Now, since we had such a good year last year and companies really didn't actually earn a lot of money, the prices were significantly higher than what the companies were making. So the PE ratio went up and up and up, and right now we're almost at 40. As a reminder, I want the PE ratio to be 15 to 20. So having a 40 PE ratio makes me really nervous right now in the stock market. So either the stocks have to go down in value and price to match what companies are making, or companies need to start significantly increasing their profits to warrant such high stock prices. Either way, something's got to change. And that puts cloudiness back into my investment crystal ball. PE ratios are concerning to me right now, but that's with the backdrop of COVID lockdowns, and companies haven't been able to grow, and some of them actually been shrinking. So the question we need to ask ourselves is what's going to happen this year and next year with our companies' growth rates? Because if companies can grow significantly, the PE ratios today, though they're high, they just don't look as bad. Now, there's a metric that takes the growth rates of companies into consideration, and it's called PEG, P-E-G. And we want the PEG ratio to be close to 1.0, because if it is, that means what we're paying today is probably about right for the expectations for the growth of these companies. Now, as you look at this chart, if you move to the far right, when the virus was creating havoc in our economy and shutting us down, the PEG ratio shot all the way up to about 2.5, which means that we are well overvalued. But as the vaccine has come online, the PEG ratio has dropped drastically all the way down to where we are today, which is about 1.0, which means that there's a huge expectation that companies are going to grow, and the PE ratio we're paying today, though it's high, may actually be just fine. let's take a look at a couple different companies to put this into context. Let's take a look at Bank of America. Bank of America's PE ratio right now is about 16, which is pretty decent. And its PEG ratio is 1.07, which is also pretty good. But how about a company like Tesla? Tesla's PE ratio right now is 1,610. Now, taking you back to my t-shirt analogy, that means you would be paying $1,610 for a t-shirt you think is worth $15. That sounds ludicrous, right? But if you factor in the consensus of what Tesla might grow to in the future, the PEG ratio is 1.7. That still is high from my viewpoint, but it's not as bad as what the PE ratio would look like. Now, how about a company like Apple? Everybody's familiar with Apple. The PE ratio of Apple is 43, which is definitely on the high side, but the PEG ratio is 3.5, which is extremely high. And that means that the market has continued to overbuy Apple compared to what its expected growth rates are going to be. And lastly, let's take a look at Alaska Airlines. It's an airline that has been decimated during the coronavirus. Its PE ratio is 83, and its PEG ratio is indeterminable because nobody has an idea at all about what the growth looks like for Alaska Airlines. That would be a definitely gamble stock. So the PEG ratio helps clear up things a little bit in my investment crystal ball, but cloudiness remains because of these high valuations. So you may be asking yourself, well, with all this information, what do we do with our investments? Well, first, I want to rebalance our portfolios because there are sectors of our economy that have done extremely well during COVID. Growth companies and tech companies have just gone up and up and up, and they're potentially overheating. And so what we want to do is rebalance our portfolio so that we don't have overweighting towards those sectors that have done well. We're going to take profits from those areas and we're going to move them back into areas that we believe in, but maybe just have not performed as well over the last year or two. The second thing I'm going to do is I'm going to continue to make sure we're diversified. And one of the ways that we stay diverse is I want to have international exposure. Now, we already have international exposure, but I want to move more weighting towards the international markets. Now, why do I want to do that? Well, historically, international markets balance out the United States stock market really well by moving differently. This chart that I'm showing you now shows the length of time that the international markets outperform the United States markets, which is the blue above the zero line, whereas the gray is when the United States stock market outperformed the international markets. And as you can see on the far left, first, the international market outperformed the U.S. market by about 3 years, and then it moved to the U.S. outperforming the international markets by 2 years. Then the international markets did well for 3 years, then the U.S. market did well for 4 years, and the international market did well for 4 years, and so on. As you can see, there's a cycle here. Well, if you look to the far right, where we are now, the United States stock market has outperformed the international markets by more than 10 straight years. Well, that's going to change, as you can see from this cycle. And when it does, we are going to greatly benefit by having more exposure to the international markets. So I'm using all of these factors to help me manage your portfolio the best I possibly can. The information on what's happening in Washington, D.C., information of COVID and the vaccine, information on international investing and valuations of U.S. companies all factor into how I'm managing your accounts. As always, I truly hope that you're healthy, you're safe, your family is doing well, and until I get to see you again or until the next video comes out,
Let's
be
have a
well.
little conversation. 'Cause every time I'm feeling low, I'm swinging it up till I'm good to go. It don't have to be complications. If you smile, I've been washed away. If you cry, almost every day. You'll always have a friend in me. When you're lost, when you're scared, when you're broke beyond repair, you can lean on me. You can lean on me. When you're sad and insecure, you can take it anymore. you feel like no one cares, and the winds are blowing everywhere, like you got no destination. You know you can always be yourself, you can always call for help, yeah. And we will find your inspiration, my friend. When you're lost, when you're scared, when you're broke beyond repair, you can lean on me, you can lean on me. When you're sad and insecure, you can take it anymore, you can lean on me, you can lean on me, lean on me, lean on me. You're down on your knees and in sorrow, and thinking there ain't no tomorrow, you can lean on me, lean on me. When you're lost, when you're scared, when you're broke beyond repair, you can lean on me, you can lean on me.